Okay, 11s, welcome to Chapter 4. Take a look at page 128 of your textbook. 128. What you see on page 128 is a diagram of the accounting cycle as we know it. So far you've analyzed business transactions. You put those transactions into the book of original entry, which is our journal. You posted them to a ledger, and from the ledger we made a trial balance. From that trial balance we could make financial statements, but we're going to add a step here. We're going to add a working document called a worksheet. This worksheet lets us do a couple of steps that we've omitted so far when doing our three financial statements: income statement, statement of owner's equity, and balance sheet. I'll start off by talking about the adjustments that we need to make. We're going to create an adjustments column. And on the top of page 129, you see a partial worksheet. Look at the left-hand side of that worksheet, you'll see a trial balance. Now that trial balance is no different than other trial balances that you've seen, with the exception that it has a slightly different format. But the concept remains the same, that it lists all of your accounts and their debit and credit balances. Again, you could not go any further than this if debits did not equal credits. And the 5 steps we talked about earlier on how to find errors in that trial balance, you'd have to use those until this balances. In accounting, we let some things become inaccurate for the sake of efficiency when we record them. Think, for example, if I just bought some office supplies today. So if I bought $100 of office supplies debit 100, cash credit 100. If today I operated business as normal, I used some paper, I used some pens, a couple post-it notes, a few paper clips, do I still have $100 worth of office supplies at the end of the day? I don't, do I? I have less. Do I know how much less? Not really, do I? A little bit less, don't I? A little bit. So we're going to allow this office supplies account to become inaccurate for a little while. Okay? But at the end of the month, we all know we have to make accurate financial statements. So even though in our head we're saying we're going to let this go for a little while, at the end of the month we're going to make it right. What we're going to do is we're going to make an adjusting entry at the end of the month. Here's what that adjusting entry would look like. Let's say at the end of the month I kind of have a look around and I see that I've got maybe half of my supplies left. Let's say I've used half of my supplies. So if I've used up half of my supplies, I would create an account called, and it would be an expense account. What might I call it? Sure, office supplies expense. Now, if I've used up half of this 100, I'm going to make an adjusting entry. I'm going to do something like this. Office supplies expense debit 100. Oh, I didn't say 100, I said 50, didn't I? If I've used half, office supplies debit 50 and credit office supplies 50. Now my balance is 50. Now I've brought that into a position where it's accurate. Okay? This is an adjusting entry. It's going to appear on the adjustments column very similar to a journal entry. There will be a debit part and a credit part to that. Okay? The second type of entry that I'll show you on the board here would be an entry to rent. Now originally, if I was a business, very often the people that I rent my building from, they want my rent many months in advance. It's maybe a lease payment. Maybe I have to give them money up front for rent. So let's say that I have prepaid rent, which is what type of account?
It's an asset.
It's an asset. Let's say that I paid for 4 months rent for $1,200. 4 months rent. So I'm going to have prepaid rent $1,200, and I would also have a credit to cash $1,200. So that would be my entry when I first prepay that rent. Now at the end of the month, 1 month has expired. I need to make this account accurate because it's become inaccurate. I'm not going to record a rent expense every single day, but I probably would do it once a month. So if this was for 4 months, a 1 month charge would be $300. So I'm going to create an account called rent expense, and I'm going to debit rent expense $300 and credit prepaid rent $300. Now it's accurate. I'm still going to use prepaid rent for the next few months, the next 3 months, but I've recorded the expense and allocated it to this fiscal period. So just like supplies was allowed to become inaccurate for a short amount of time, then we make an adjusting entry to make it accurate. We do the same thing with prepaid rent.